As many of you know, I've previously done videos on real estate syndication investments and how to do your due diligence before investing in any type of real estate deal. Unfortunately, today we're going to review what happens during the worst case scenario, when that becomes your nightmare reality, because a deal that was already filled with numerous red flags is now a federal criminal case, and investors have lost millions. Meanwhile, the fund manager allegedly responsible for it all is now facing federal prison time. So let's review what went wrong in this tragic situation so that you never find yourself in a similar situation. Welcome back to Confident Real Estate. I'm your host, JC. Unfortunately, whenever there is money and investment opportunities involved, it draws sometimes a malicious character like a moth to a flame looking for an opportunity to steal. And this criminal element is really what prevents a lot of people from even considering alternative investments in the first place. And it's really unfortunate. The whole purpose of this channel is to share my knowledge and experience and some of the news stories that are out there to help build your confidence so you can go forward confidently to invest in real estate, knowing that you've done the due diligence you need to do and you've got your eyes open for any deal you go into. I'm just trying to help you a little bit more in that process of building your confidence and your knowledge level. So unfortunately, that sometimes requires us to look at the ugly side of real estate investing. And I want you to do me a favor. If you find a video like this one where we look at the ugly side helpful, let me know by hitting the like button down below so that I know this is something you might want to see more of and I can bring you more of these stories, because I think it is useful to see what's out there, what tricks and deception people try to use for investments that they can steal from. It's knowledge that I find useful information myself, and I want to share it with you. But let me know what you think by hitting the like button. And of course, if you're not yet a member of our Confident Real Estate family and you are looking to build your confidence for your own investments, please consider hitting the subscribe button down below as well. Okay, let's get into it. The Securities and Exchange Commission recently announced that they are charging fund manager Eric C. Malley of MG Capital with defrauding investors and misappropriating funds. He allegedly misappropriated over $7 million of his investors' funds, while also lying to them about his actual investment management experience, their exposure to risk, and the capabilities of his investment firm to even deliver on the promises that they made to the investors in the first place. According to the SEC's complaint, beginning in 2014, Malley, a licensed real estate broker with no investment management experience, and MG Capital, solicited investments in two real estate funds, MG Capital Management Residential Funds 3 and 4, respectively, raising a total of $58 million, primarily on the strength of a fabricated investment track record. The complaint alleges that in marketing Funds 3 and 4, Malley and MG Capital falsely claimed that they had previously managed two highly successful real estate funds with a combined portfolio value of $1.18 billion that had significantly outperformed the S&P 500 index over a 10-year period, when in fact, those two funds never even existed. And he promised his potential investors that their money was 100% protected from loss. In general, if something sounds too good to be true, that's probably because it is. And statements like your investment is 100% protected from loss should raise red flags and at least put you on notice that some serious due diligence is required on your part before you write a check. Additionally, Malley and MG Capital claim that investors' funds were secured by a balance sheet worth over $250 million. And again, the SEC alleges that was completely falsified and that investors' funds were at risk on day one, and that Malley had completely lied about his actual investment management experience. And in addition to misappropriating over $7 million worth of his investors' funds, they allegedly falsified financial statements to deceptively conceal huge losses, according to the SEC complaint. Many investors were initially shocked that Malley, a man who held himself out to be experienced and transparent and honest, was deliberately lying straight to their faces in order to attract more investors. The SEC, meanwhile, contends that they have more than enough evidence to obtain a conviction and have charged Malley and MG Capital with anti-fraud provisions that were established by the Securities Act of 1933 and the Securities and Exchange Act of 1934, both of which were put into place just after the Great Depression. Unfortunately, this is just one of many fraud cases that has been filed recently by the SEC, which has taken a much sharper focus since the housing crisis in 2008 into looking into investment funds that are involved in investments in real estate. Furthermore, with the passage of the Jobs Act of 2012, real estate investments are much more generally open to the public, which does lead to often more predatory and malicious fundraising methods. So the SEC is really keeping a focus on these types of investments. Always remember that firms offering investments to the general public are required to be very open, honest, and transparent about their prior experience, their balance sheets, and the potential risk that investors may face with the investments that the firm is making. Again, MG Capital, for me, red flags should have been raised by the mere fact that their website doesn't advertise any of their portfolio holdings from their supposed two very successful prior funds. That would be a huge red flag to me. Every investment firm that I have ever dealt with always proudly establishes and markets their portfolio of investments, their successful track record, and a history of why you should be investing with them because of the success they've had in the past. MG Capital's website had none of that information. Among the many lessons to be taken away from this unfortunate situation, some of the prime lessons that investors and potential sponsors of crowdfunding deals should really take away from it are the following. 1. No such thing as 100% protection from loss exists for a real estate investment deal. That just is not realistic. Every real estate investment deal has some potential risks. So if someone's telling you your investment is 100% protected from loss, that's a red flag, and you should know that from day one. 2, you have the right to ask anybody who is asking for your money in an investment in real estate to know what their track record is. Ask to see what their current portfolio of investment properties consists of. What have they bought? What have they sold? Did they sell at a profit or a loss? And what do they currently own? And what are they looking to buy with the money you're investing? You have that right. If they're not willing to tell you that, red flag, you probably shouldn't be investing with them. 3, no fund manager can exaggerate their investment management experience. A fund manager who is partners with a co-fund manager cannot tell you that they have great investment experience when they don't. Their partner may be the one with the investment experience, or they may not be, but they cannot tell you that they have experience that they do not have. Ask about their track record and do your due diligence on what properties they've owned, what their experience is, where they've previously worked, etc. In this digital age, it is not that hard to do. Go look up properties that this fund potentially owns or supposedly owns and look to see who's signing on the dotted line for the mortgages that are recorded against the property. It's pretty simple. You'd be surprised. And lastly, be aware that at the end of the day, transparency is all you can ask for and give, whether you're the investor or the sponsor who's putting the money together. Good or bad, be honest about what your experience is and what your prior history is with investment deals in this firm and fund or anything you've done in the past. Transparency and honesty are all anyone can ask for. If you want to read more about this particular case, I'm going to leave the SEC's link to their press release down below in the comments and description section for this video, so definitely go check it out. It is an interesting read, and it's reality, and that can be scary at times, and this certainly was one of those scary situations. And again, if you haven't done so and you do like this type of video, please smash that like button and let me know. And if you're not part of our Confident Real Estate family, really do please consider hitting the subscribe button and joining the rest of us. Again, I appreciate you watching all the way to the end. Until next time.